Greetings, folks. This is DC Investing. I've reached financial independence and I'm talking about topics that may help others on their journey towards financial independence. And today I'm going to talk about something I've used in the past that has made a difference in the amount of funding that I have had access to. And so I want to share this strategy with you guys. And basically, who this is for is if any of you plan on making charitable contributions to a charity. And specifically, for those folks who might be on the religious side and regularly contribute to a local congregation or church or worship service or something, there's a biblical principle called tithing, which is basically giving a tenth of what your increase is to the church or charitable organization that you do. And so if you're somebody who regularly tithes to an organization, or if you just want to give 10% of whatever you do to a good cause, I've heard other people out there saying one of the ways to increase your I guess your overall general wealth is actually to give some of it away. And there are definitely people that will say, hey, plan on giving a tenth of whatever you get to a worthy cause that you are interested in, and just see, hey, does that make your overall wealth go up instead of down? So anyhow, I plan on tithing a tenth of what my increase is each year. And so the strategy here is to get the best tax incentive that you possibly can, so that you and your charity get to keep more of the funding and the government takes less. So this is using the existing tax codes and incentives in order to benefit basically you the most. And so how this happens is, a charitable contribution is something that you can itemize as an itemized deduction. But one of the problems these days is that the standard deduction is so high that it's actually difficult to get your itemized deductions high enough to make any difference. And so thus we got to strategize. So basically the strategy is to group multiple years of charitable contributions together into the same year so that you can make an itemized deduction instead of a standard deduction. So I'm married, so we do married filing and jointly, and so the standard deduction each year is $30,000. So I have to get my itemized deductions above $30,000 for this to make any difference. And so my salary is, I don't know, somewhere around 150K a year. So a tithe would be about $15,000. So just 1 year won't do that. Things that also count are your property taxes. I pay about $2,400 a year. Your state tax also counts towards that. I think I might be around $7,000 a year or something with that. So 15 plus 7 plus 2, you're about 24,000. That's still not enough to make it. So the strategy is pay for multiple years of your contributions in a single year. So what you do, you could, like, if you normally make charitable contributions through a year, just wait through the year, put it in an account or something so that you know what's supposed to go there. And then the following year on, say, January 1st, you can make your entire contribution. So in my case, that would be about 15,000. And then during that whole year, you can continue to do regular contributions all through that year. So by the end of that year, you have then made the equivalent of $30,000 of contributions. But then you go even further and say, for the following year, I'm going to take all my contributions that I would make in the third year, I'm going to pay them in the month of December so that they count in the same year. So what that does is it turns what would have been a $15,000 a year contribution into $45,000 in the same year. And then you stack onto that your local property tax plus your local state tax. And so you kind of get your contributions up in maybe the $55,000 range by paying 3 years of charitable contributions in the same amount. So a standard deduction would have given you $30,000 of a deduction, but now you have a $55,000 deduction. So you save your taxes, or you get a tax reduction of quite a substantial amount, depending on your tax bracket. So if you're in the 12% bracket, on that amount above 30,000, so what was that, another $25,000 above that, you save 12% on 25,000. Or if you're in the 22% bracket, you save 12% or 22% on that 25,000. If you're in the 30%, or I don't even know if that's a bracket, but 24% or whatever, your savings can add up quite a bit by doing this strategy for something you would have done anyways. But you're just using the tax codes to still donate to the cause that you're interested in, while at the same time getting the most of a tax break you possibly can. So this idea of lumping charitable contributions into a single year can make a big difference on how your charitable contributions overall, make a difference to your tax fund. So the hopefully that's a strategy. I don't know if you thought about that or not before, but it's certainly something that I have used to pay the minimum I have to in my taxes while also doing some good in the world. So a couple other strategies on that. Some brokerages have a donor advisory fund, and that is a way to kind of transfer stocks and other things into it, and then you can choose who you give your funds to. However, I looked into the one, I'm with Fidelity, and Fidelity actually charges they have a fee to manage your donor advisory fund. So I want to avoid fees every chance I get. So be careful of that. The donor advisory funds have a little bit of a fee, and you don't need a donor advisory fund in order to make a contribution. The way that I contribute is I just contribute directly to my organization. My congregation actually has an account with Fidelity. It makes it super easy. I just call up Fidelity and say, hey, I want to make a charitable contribution of this number of shares from my account to this other account number. And they say, yep, you want to do that. And they actually gave me the ability to choose which specific shares that I wanted to transfer. And that's really helpful, because if you have huge gains in something, you can say, choose the things that I have the biggest gain in and move those things over. And I'll explain that in just a minute. So it was really easy. You just call them up and say, transfer, make a contribution from my own account over to this charitable account. And there it goes. It goes that same day. Funds move over, and you've made a charitable contribution, and then you get your tax deductions. Now, I said choose the funds that you have with the biggest gains. And the reason for that is the gains do not get taxed. So let's say you spent, $30,000 to buy a stock, and it appreciated by $100,000, or not, sorry, 100%. So now you've made a $30,000 gain on the stock. So the total value of that is $60,000. So if you sold the stock and then made a cash donation, you would then have to pay taxes on a $30,000 capital gain. So that's not good. So the strategy is you just donate the stock directly to the charity, the whole thing. And what happens is that gain, you still get the value of it, but you don't pay the taxes on it. So again, you bought 30,000 of something, it went up 100%, it's worth $60,000. You tell your broker to transfer that to the charity of your choice. They just move the shares over to their account. You get the whole $60,000 benefit of making that charitable contribution. The charity gets the whole $60,000 worth of shares. The only thing that happens is you don't have to pay tax on the $30,000 gain. So that's a great strategy. And I'm planning to do this again this year. It's been a couple years since I did a contribution, and I've got a couple stocks, like one's up 130%, another one's up, 120%. If I sold those, I'd have to pay the capital gains on them. I don't want to do that. I'm just going to transfer the stocks directly to the charity, and then I do not have to pay taxes on that 120 and 130% increase that I had. And it's a great way to really maximize the good that you can do in the world, while also paying as little as possible to the government, which I don't think does a whole lot of good in the world. So this is a great strategy in order for you to get the most out of your charitable contributions, be the most tax efficient. And then, hey, if you're harvesting, a 22% tax difference on this charitable contribution, that is a great gain. And every gain helps on your financial journey. So, I would definitely recommend really think about your charitable contributions. Is it possible to lump them together in a single year so that you get the biggest tax deduction on your itemized deductions as you possibly can. And, you know, doing that is a great way to reduce your taxes. So if you guys know, do you know about this rule? Have you ever used it? You know, comment. Um, you know, it's a great way to do some good in the world while also getting a tax benefit. So like, subscribe. We'll see you. Bye.